is Wednesday, the 2nd of November, and we're going to start out today with a 1 minute chart. We don't typically do that, but just wanted to point out the volatility after the Federal Reserve meeting. The initial reaction was very strong. We had a sell off. It looked like it was going to rally back up again, and then the anchored VWAP from the Fed acted as resistance, and from there it was lower right into the close here today. So I always say the market doesn't care what I want, but I did say I want it to come down towards this level. So if we're going to bounce, then tomorrow this would be the place to do it. There is zero evidence that it is likely to occur. So looking back at the daily time frame, we've got that 20-day moving average just below us. We've got the anchored VWAP from the CPI low, which is the low of the year. We're once again at an important level. We got extended to the upside. We're now at what is again the neckline of this inverted head and shoulders pattern. So if you think you have an advantage here, you've got an advantage over me, because I don't see an advantage long or short in this market right here. To me, again, as I've been saying, it's we continue to be in an environment where we need to play a very strong defense. And as much as we want to be making big money in this market, you've got to be flexible here. Things just don't last in either direction, and it's very clear when you look at these charts that that's the case. The Federal Reserve can't tell us what they think is really happening, basically because they don't know. They don't have a crystal ball, and they don't control interest rates. The market controls interest rates. They have consistently been behind the market. So to listen to them play their games about trying to toe the line between, hey, we're possibly going to pivot as everyone's talking about, or something else is going to happen, it's just an exercise in frustration. The Nasdaq is below the anchored VWAP from the CPI low. If this market rallies up towards that level and finds resistance, I don't see what's going to keep this market from making a new low. It just doesn't seem likely to me. So the weakness in the Nasdaq is clearly not a good thing. Below the 20-day, below the AVWAP from the CPI in year-to-date low, below the prior low as well. Looking at the weekly time frame, it's just, again, if they don't scare you out, they'll wear you out. No one wants to ever believe me when I'm saying that. They get all excited about these 10% bounces, but the fact is the market needs time to heal. The Russell 2000, we've got a declining 50-day moving average, and we were getting extended, and here we are coming down towards that anchored VWAP from the low as well as the 20-day moving average. If we're going to find some stability, it's likely to be in this general area where we have that AVWAP from the low as well as the 20-day moving average, and the 50-day moving average will continue to decline here for some days. So looking at this daily chart, this market, you can maybe start to believe the scare you out, wear you out, and maybe we're going to just do this. And it doesn't mean it has to go higher. It can mean it does something like this, creates a new low, and then 2 years later, nobody knows the future, including Jerome Powell. The semiconductors were showing some initial strength this morning as they made a new high, but that quickly reversed as well. When you look at a 2-minute chart of the AVWAP from the Federal Reserve, and we'll start to reference that over the next couple days. Immediately, it's not always precise, in here you get some volatility, but then here it acted as pretty much precise resistance, and we're below it and closed, near the low of the day. We're coming into the AVWAP from the CPI low, which is in this market also the year low. We're back below the prior summer low. We're at the 20-day moving average. If it's going to catch a bid, this is where it has to do it in the next day or two. If it can't do it in here, then we're likely to retest the lows. The biotechs, they got up just short of that AVWAP from the peak, and this is what we were kind of looking, discussing as a potential scenario. I still think it's likely to settle down in near 124.5, 125. There's just no reason to be a buyer. The 5-day moving average is advancing here, so basically the light went from green to yellow today. It had been making higher highs and higher lows. Now it's kind of yellow. If it does this and gets stuck below that 5-day moving average in the next few days, the light turns red on the intermediate term time frame, and it is much more likely then we would come come down to that 124-ish level. The energy names still in an uptrend, but they've gotten quite extended here, and I think the light has kind of turned a little bit yellow here. Alpha Trend subscribers were stopped out of the last piece of CVX after buying it over here. The last piece was stopped out today. We were very cautious about it because of the so-called breakout after a 10% rally, and just back to the XLE. Now this market, it doesn't have to drop, in order to correct. Maybe we come down and do something like this and correct sideways, or, maybe something like that. But, the bottom line is the easy money on this part of the rally, I think, has been made in the energy names. Now it's time for them to settle down, see if the buyers will step in and kind of prove themselves once again that they're interested in taking these stocks higher.